Markets saw nice gains on Friday on this idea that with this job support in mind, maybe the Fed will start to slow its pace of rate increases. But then you balance that with what Larry Summers is saying over the weekend. What do you think? Is the market right or is Summers right?
Well, Seema, good morning. So, last year the market had to grapple with 450 basis points of Fed increases, and now it's the economy's turn. So this year is going to be pretty rocky, particularly in the back half of this year, because basically what's going to happen as the rate hikes actually start to take hold, you're going to see some of the problems that come along with it, like job cuts. And you're starting to see the beginnings of those start now, both in tech, and it seems like that's feeding into other places like finance with Goldman Sachs. So as we move throughout the first quarter, you're probably going to see that permeate even further into other industries. And that will be probably the beginning of the end of the growth cycle for this particular part of the economy. So we're going to see that happen. I don't think that the market is going to have as difficult a time this year as it did last year, because it probably will mean that rate hikes will, go away. And I don't know if there'll be necessarily a pivot very soon, but I think that what you're going to see is a signal that the Fed is going to back off of rates probably closer to the March, April timeframe. So that's what I'm sort of expecting. And that will really help markets calm down, because once markets get some type of idea that the rate hike regime is starting to roll over, then the dollar will stop going up. And that's going to make a big difference in U.S. equities.
It seems like you like healthcare here. Tell us why.
Yeah, so one of the reasons why is because the dollar's been so strong, and a lot of healthcare companies are domiciled in Europe. And a lot of those European companies have large dollar-based revenues. So you have the reverse opportunity that we saw in the last decade, where you have a strong dollar, but weak dollar, strong euro pound, that has reversed, and you're starting to see that currency translation sort of favor large pharma, and with that extra earning potential that they have, they're going to start doing M&A, and you're starting to see a little bit of that today with AstraZeneca. So I believe that particular sector is going to be poised for growth as we move forward. It's been defensive in 2022, offensive 23 and 24. And probably what you're going to hear when JP Morgan's healthcare conference kicks off is that there is an enormous amount of innovation that people have been ignoring over the last year, paying attention to rate hikes or ignoring all the good things that are happening in healthcare. And you're going to start to see those particular technologies and innovations be displayed. And there's a lot of money to be made in biotech land. So that's a good place for investors. And always, anytime you have a market turnover, there's a leadership group change. Technology is no longer in the lead. It's going to be healthcare from here forward.
Jimmy, as we wrap up here, I want to get your thoughts on the major reversal we're seeing in oil prices right now. We saw the last 3 months of the year, right? Oil went down significantly, and here we're up about 4% on the day. Where do you see prices headed this year?
Yeah, I think oil is going to be a little higher. You're not going to have such a large release of SPR, but you also have the bigger issue, which is actually positive overall, China reopening. And that's going to create a larger surge for energy prices. And so you'll see energy probably stay in the 80s and 90s this year, simply because you have a very large fraction of the world's population being brought back online, and with it, larger energy consumption. So unless there's some end to the Ukraine-Russia conflict, which doesn't seem likely soon, you're going to see energy prices stay very high. And that's another sector where investors can do very well. Energy prices, anything over 70, huge opportunity for dividend plays.